Let me ask you guys a question before I start this video. In the comments down below, I want you to put what type of financial personality you are. I can tell you guys right now, I am definitely the saver. Even though it hinders some of my growth, I just like hoarding and saving money. It makes me feel comfortable. And as I grow my financial literacy, meet new people, and just grow in my financial career, I think I can pretty much name one person for every single different types of these financial personalities. And I know out there watching this video right now, you are one of these people, or you definitely know one of these people. So what I want to do in this tier list is I want to break down each different financial personality. Now, in the long term, some of these people, they're going to look at themselves in the mirror and say, I'm rich. Some are going to be trying, and some are probably going to stay broke or be cooked the rest of their lives based off their financial personality. Now, if you fall into one of these personalities and I rank you low on the list, it's my tier list. I'm not coming at you. It's just for fun, bro. So let's get into the video. Let's go ahead. Let's rank these different personalities and let me know in the comments down below which one you are. To start off this tier list, this is the quiet operator. Now, these are the people who you would probably never guess have money, probably live next door to you. They drive a very normal car, have a normal house, doesn't really talk about finances or investing, doesn't argue with anyone online or flex any type of money they have. But behind the scenes, they've probably been investing in their Roth IRA for years, probably have employer 401k match that's built up to the hundreds of thousands, and just know exactly what they're doing when it comes to their finances and don't let lifestyle kind of get in the way of their income. And the biggest strength of this person is usually they have a lot of emotional independence. They're not spending to impress anyone. They don't really care what people think about them. And these people are really tight when it comes to financial leaks. They probably don't have a lot of subscriptions. They're not spending crazy money on door dashing or any of this type of stuff. They probably cook at home, low car payment, or I should say pay it off car, huge net worth, and just know what they're doing. And from a long-term, financial standpoint, these are the people that every night they lay down at night, they put their head on their pillow and they can just say, I'm rich. These people will be rich forever. They can probably afford supercars and nice watches and bigger houses. They just don't care to. They want to live a normal life and just grow their money while they live. Next up on the list is the day trader. And before I break down this personality, I know there's going to be people who watch this and, they're up 100% this year because they know what they're doing. Here's the thing. For every one day trader that's doing good, there's 50 who are in the red. So that's why I kind of hate on day traders a little bit. I definitely know there's people out there that know what they're doing, but not everyone can be a day trader because it is kind of hard. A lot of day traders do have good knowledge. They'll have charts open all day. They're going to be talking about candlesticks and levels, support and resistance. I don't even know what half that means. They're going to be watching, the futures market at 5:30 in the morning. For the most part, they spend a lot of time looking at the markets and kind of know what is going to happen. But you're competing against big institutions and other algorithms and just professionals in general who might have better tools or more experience. So day trader is definitely not for new beginners at all. This is for very experienced people. And even day traders with a very decent strategy, one bad trade can turn into you losing all your money or even just not making the right, calls, and here and there, you could lose against the stock market, where in that point you would have had less stress just investing into the S&P 500. So is it possible to win as a day trader? 100%. I'm not saying it's not, but it's definitely a high skill with very low success where a lot of people actually end up losing their money. So I would say for the majority of the time, day traders might be cooked. Next up on the list is the real estate purist. And boy, do I know a few of these guys where it's you try to talk to them about stocks or crypto and they just shut you out. This person only believes that real estate is the true real investment. You want to buy land, you want to buy a house, screw stocks, screw crypto. That's for little kids, right? We're grown men, we buy real estate. That's their whole motto. And I think at the end of the day, real estate, look, you can make a lot of money. Real estate is very powerful. There's a bunch of appreciation that comes with real estate, and there's a lot of cash flow. So you get kind of best of both worlds. But the problem with real estate is there's definitely a lot of real estate swings. If you look at the past 30 years, the real estate cycles do exist, and they are out there. And there are times where real estate will just take a deep dive way more compared to stocks. So I think real estate purists, while I'm someone who always believes you should be diversified across all different investing, vehicles, real estate, stocks, crypto, whatever it might be, I do think these people are locked in. Right? I know you could say they're rich, but I do think they leave a lot on the table with stocks and other investment vehicles. So real estate purists, These guys are definitely locked in. They probably make a lot of money, they're probably rich, but they care about real estate just a little too much for my liking. Next up is the investing is easy guy. Now, this is the guy, a little bit different from the day trader. This is the person who trades like weekly calls and puts and who thinks everyone else is dumb for buying index funds. Like, this is the guy who hates on the S&P 500 and is like, bro, why would I invest in the S&P 500 when I can trade Forex? Or like, why would I invest in the S&P 500 when I can put in a contract and triple my money overnight? And they're always going to talk about like 200% gains. Every time they have a little movement upward in their portfolio, they're all over social media, posting screenshots, posting themselves on a yacht, saying how investing's easy, people are losers, stuff like that. These guys are just kind of like douchebags in general. But if the market's red or they lose money on an option or a contract or anything of that nature, these people go quiet. Like, you'll never hear from them again unless they're doing good. And like, don't get me wrong, like, I think investing is easy when it comes to just buying, diverse ETFs. But these are the people who like take it one step too far, where they're telling like normal people that it's like, bro, you just need to do options. I'm telling you, just do options and you'll be fine. That's the type of people I'm talking about. And once again, just like the day trader, can these guys make money? Of course they can. These guys can definitely make a lot of money. But at the end of the day, they have a lot of overconfidence, and they can they can definitely mistake a lot of short-term luck for like they think they're wealth building for the rest of their lives and making generational wealth. So I think the investing is easy guy is also a little cooked like the day trader. These guys can lose it all. They can make great money, but they can also lose it all. And just not my cup of tea for long-term wealth. Next up is a side hustle guy, and you guys probably all know a side hustle guy. Maybe you were a side hustle guy. In my early 20s, I like to think I was one. These are the people who always have something going on, right? Whether they're setting up a new website, they're doing some type of freelancing, have a YouTube channel, flipping sneakers, using, Amazon to sell things, whatever it might be, there's always a new idea that they're trying. And honestly, bro, I respect side hustle guys. If I want someone on my team, I want a side hustle guy on my team because they're willing to work and try to make a quick buck. And the strength of side hustle people is their initiative, right? Like, they're not going to wait for permission from anyone. They're just going to try to increase their income. Like, I don't care what anyone says. I'm going to do this and try to make more money. Side hustle guys, right? They start fast, but they also quit fast, right? Like, I know a lot of these guys where if Uber's not hitting, they're done. Or if the car washing business isn't hitting, they're done. And most of the real money comes from sticking with one side hustle, building it out, and kind of getting through the mud with it. Now, if this personality ever locks in on and commits to one side hustle and it gets relatively successful, these people can become millionaires easily. These people can become business owners and great people in general. But until that happens, for side hustle guys in general, some of the for the majority of them, I would say some of the results are inconsistent. Once again, you might know someone who's making great money doing a bunch of side hustles, but for every one, there's probably 10 that aren't doing good. These people are trying, right? I give them credit, put them right in the middle. They're trying to make money. They're trying to get to that long-term freedom number for themselves. Next up is the later guy, or the I'll start next year guy, or I'll budget later guy, whatever you want to call them. And this is the person who they know exactly what to do. Like, they know about Roth IRAs. They know they should invest money. They've watched the videos. They know about budgeting. They might even have a few investing books, sitting on their shelf. They've done the research. They know what to do. But they're always waiting because the stock market might be a little down right now, or it might be a little too high up. And they think things are too expensive. So they're either waiting for the right amount of income, or they're telling you, bro, I promise you I'll invest once the market calms down. Or I'm going to budget next paycheck, right? Because they're always waiting for life to feel stable. But as you guys know, life usually is never stable. Stable lives are, far and few in between. And every time you delay investing or delay saving or anything like that, you're just putting your future self at risk. And this caution, it can turn into a lot of investing paralysis or saving paralysis where you just end up never doing it, or worse, going in the wrong direction and spending that money on things you don't really need. So I think the later guy, or the I'll start later guy, unfortunately, these people are probably going to stay broke. While yes, they might have decent jobs and maybe are doing the bare minimum of 401k matching, they're probably going to stay broke until they really lock in and get it started. Next up is the financial influencer Copycat. Now, I got my boy Humphrey Yang on here. I'm not using his picture in any hate, but these are the people whose portfolio changes every single time a financial influencer uploads a new video. Like 1 week, they're dividend investing and they're buying SCHD because all the financial influencers right now are saying SCHD is back. 2026 is the year of SCHD. And then next week, they post a video talking about growth stocks. And then that same person goes, sells all their SCHD to buy the Mag 7. And then it's cryptocurrency. And then it's real estate. There's no independent thinking from this person. They're just subscribed to every financial influencer. And then they're just copying exactly what they're doing. And I don't think the problem's learning from others. Like I follow a bunch of financial influencers and I love learning from them. But you got to have some type of conviction in the things you're investing in. Don't just buy SCHD because people tell you to. Don't just buy Amazon because people tell you to. You need to research why you're putting your money in there. Like you wouldn't want to just buy something because someone told you to do it. You'd want to research. You'd want to look at reviews, look at the company, look at their earnings, stuff like that. Like you want to have conviction on things you're buying. So the financial influencer copycat, I'm going to put them in the they trying category. I think they're trying, they have no ill intention. They just need to be a little bit more independent with their financial decisions. Next up on the list is the crypto bro. Now, we all probably know crypto bros. I know a whole bunch of them. You know a whole bunch of them. These are the people who are telling you to go all in on Dogecoin before Elon Musk went on SNL. Like these are the guys who are just traditional finance to them is dead. Stocks to them are dead. If you want the S&P 500, like these are the people who are, it's like if the S&P 500 is returning 20% on an annual percentage right now, like that's not enough for them because it's not cryptocurrency. Like they would rather put all their money into Bitcoin and call it a day. And to be fair, crypto bros can make a lot of money. Like I know some people in the crypto space who have made great amount of money, 3x, 4x, maybe even 10x, returns on some of the coins they've bought. But I would say for the most part, dude, a lot of these crypto bros got lucky. They just had early adoption before anyone else. They had a few screws missing, and that's why they believed in crypto a very long time ago. And they made a great amount of money on it. I think crypto bros nowadays are kind of becoming outdated, especially with the current cryptocurrency scene that we're seeing right now. I still invest in Bitcoin. I still hold XRP. I still hold some, cryptos. But the true crypto bro, the dude who has no stocks, no real estate, and just all in on crypto, I think we're starting to see that kind of die off. Now, once again, just like all of these on the list, can these guys make a lot of money? Of course they can, especially in bull markets. These guys can make 600%, no problem. And it's just believing so strongly in one thesis that you ignore diversification and you ignore all the risk management that comes along with investing. So crypto bros, in my opinion, man, I think that they're definitely cooked. I don't think they'd stay broke because, once again, I know a lot of crypto bros who are good with money. But in the long term of things, even though I believe in crypto for the long term, I think true crypto bros might be cooked. Next up on the list is the income maximizer. Now, this is the person who understands that your 20s, your 30s, income is the main leverage and lever that you'll be able to pull on. So they're not obsessing over budgeting or cutting or anything like that. They're strictly focused on increasing their earning power. Now, these people are different from the side hustle people because these are people who mostly work probably a tech or corporate job where they job hop, they negotiate raises, they build strong skills, and they put themselves in specific industries that pay. And I wish all of us could be in these people's shoes. It doesn't really work like that. I wish I could be the 25-year-old making $100,000 a year. Unfortunately, that's just not me. And, obviously the strength of this personality is leverage. When your income grows, it just frees up pretty much the rest of your life. Everything becomes easier. Investing will become easier. Saving is going to become easier. Recovering from any type of financial mistake is going to become just 10 times easier. But the risk here with income maximizers, one could be ego, right? Some of these people just are way too egotistical. And two is burnout, right? Like some of these people get out of touch and they think like everyone can make $200,000 a year in their 20s. It's just not possible. And some of these people, they work jobs that, are 80-hour work weeks, 70-hour work weeks to make the money, and they get burned out. So I think for the long term, these people can definitely make a lot of money, especially if they can really be smart with their finances while they're maximizing their income. These people are probably rich. Next up is the lifestyle flexor. This is the person who upgrades life every single time income goes up, or honestly, their income doesn't even go up and they still want to flex their lifestyle. They get a promotion, boom, brand new car on the lot. They get a bonus, Boom, brand new car, new apartment, whatever it might be. And on the surface, the lifestyle flexers probably look the most successful out of everyone on this list. Like, they look successful. They're flexing $100 bills. They're showing off their 911s and Ferraris. But at the end of the day, these people are probably the brokest of broke people out there. Like, they're not trying to be responsible. They simply just care what people think about them, and they spend their money to show that. And I think they just prioritize it way too much. Like, they prioritize how they look versus how much wealth they actually have and are able to attain. And over time, this personality is just going to create the illusion of wealth without any real assets under their name. So if we're talking about from like a long-term standpoint, like, they might look rich, they might look locked in, they might look like they're trying, but at the end of the day, bro, lifestyle flexers, these people are probably broke, and they're probably going to stay broke forever, if we're being honest. Next is the long-term builder. This is the person who understands that wealth is a time game. These are the ones who use their Roth IRAs and they max them out. They take the 401k match. They don't leave money on the table. They invest in ETFs. They don't need to outsmart the market. They're cool investing into VU and the S&P 500, and they're willing to just stay in it. They're not chasing any type of hype. They're not reacting to headlines. They're not switching strategies every week or month. And the real strength of this personality is just self-control and discipline. Like, when the market drops, they don't care. They probably don't even know the market drops because they don't even look at their phone. They don't care enough. They keep buying. And when something trendy explodes, they don't get FOMO. This is where I kind of fall out of this personality, because like, I get FOMO every time. Like, whenever something's up over like 5%, I'm like, what an idiot. Why did I invest in that? When it's like, I didn't even know that thing existed until I saw it was up 5%. And these people over 10, 20, 30 years, I mean, they're just going to build wealth probably more than anyone on the list, if we're being honest. Like, probably more than the income maxer. These people are the rich people. These are the people who can look in the mirror at night and say, I'm rich, I've been investing for 40 years, and I have FU money now. Next up on the list is the over-diversified guy. And this was me when I first started investing, if I'm being honest with you guys. These are the people who just own everything. Like, they probably have 10 ETFs in their portfolio that all overlap, and they just have no idea. They don't want to miss anything, so they own the NASDAQ. They have dividend ETFs. They have international ETFs. They have the total market ETF. They probably have some gold and silver, maybe some cryptocurrency, maybe some small cap companies, some mid cap companies, maybe some REITs, whatever it might be. These people are diversified in literally everything, to the point where it's too much diversification. And I'm not talking bad about these people. Like I said, this was definitely me when I got into investing. I had like 4 ETFs in my portfolio that had like 90% overlap, and I just had no idea. I was just investing into all of them. But at a certain point with over diversification, you're not really optimizing your returns. You're kind of just owning overlapping assets and making things probably a little more complicated than they need to be. And sometimes it comes from fear. Sometimes it comes from wanting to feel smart and not wanting to really miss out on anything. I know FOMO can definitely play into being over diversified. But here's the thing. Building true wealth, long-term wealth, you don't need 18 ticker symbols in your portfolio. You just don't need it. At the end of the day, these people are trying. Like, they're trying to make money. They're trying to be smart with their investments. I think they go a little way too overboard with having too many ticker symbols and too many different investments. But at the end of the day, bro, you can't fault these people. They're trying to make money. They're trying to invest, and at least they're going in the right direction. Next up is the rich mindset guy. Now, this is the person who talks about money abundance consistently. Like, they quote billionaires, they talk about how money is a mindset, and they believe thinking rich will make you rich. And they, like, in the morning on their bathroom window, they write like, I'll be rich one day. And to be fair, like, look, your mindset matters. Like, I'm not hating on mindsets or manifestations or anything like that. Like, if that's what you need to believe and you need to tell yourself you'll be rich one day, I will support you 100% through that. The problem is you can't manifest compound interest, right? Like, at some point you have to invest your money, and you can't visualize your way into a fulfilling life. Like, you have to take the steps to actually create a life that you want to live. And a lot of these people who believe in manifestation and having good mindsets, I feel like they don't give themselves enough credit. Like, at the end of the day, you're the one taking the steps to get yourself in the places you want to be. So wealth alone will never be built off of beliefs. It's always going to be built on structure and systems that you have in place. So tracking your net worth, investing, increasing income, being controlled with your spending, whatever it might be. So I'm going to put the rich mindset guy in the they trying category. I mean, look, they're trying. At some point, you have to actually grab life and start investing your money and trying to increase your income, but at least you're trying. Next up on the list is the avoider. And this is the person who doesn't check their bank account. They don't track their net worth. They don't really know how much money they spend each month. These are the people who usually don't even care about their finances. These are the people who are like, hey, how much money do you have in their bank account? And then they are like, oh, I don't know. I haven't looked at my bank account in like 3 weeks from now. I just go along with life. And I kind of envy these people to a certain extent. It definitely couldn't be me. I need to pay attention to my finances, even though I'm decently good with my finances. But these people just don't care. They avoid it. And look, honestly, any money problem, right? It's never going to go away just because you avoid it, right? Bills are still going to be there. Interest still going to compound. Time's still going to, pass. They just kind of drift along through life, never really caring about their finances. And drifting financially, as you guys know, is super dangerous because years can go by without any real progress. Like, even though you're making money and paying off your debt and paying your bills, that doesn't mean you're actually growing your wealth. And wealth requires a lot of awareness, right? Like, you don't need to be too crazy about it, but you definitely got to care about it to a certain extent. And we all know avoiders, right? They just don't care. They don't want to be bothered by it. And truthfully, in my opinion, avoiders are probably going to stay broke unless they get to the point where they're willing to at least look at their expenses or at least try to budget to a certain extent. The avoiders, while they might have the least amount of financial stress as a lot of people, they just don't care enough to actually look at their finances. Next up are the FIRE movement people. These are the people who want financial independence and they want to retire early. By the way, that's what FIRE means if you didn't know. But they track every dollar. They optimize their expenses. They invest hyper aggressively and they care about savings rate probably more than like their firstborn child at this point. And from a pure number standpoint, this personality probably builds net worth the fastest because that's the whole point of this personality, is to retire early. And having a high savings rate plus consistent investing, I mean, that's probably one of the best things you can do for your net worth, to be honest. Now, the goal of people with the FIRE movement, they're not really trying to get rich. They're just trying to get to the point where they can just live a free life and not have to work for anyone anymore and just live off their retirement money. So in my opinion, sometimes for them, life can become a little bit too much of a spreadsheet. Like, it's hard for them to enjoy life and to actually want to spend their money because all they worry about is that if they buy, Shake Shack, they're not going to be able to retire till they're 36, and that like freaks them out. But from a probability standpoint, I think most people with the FIRE movement mentality and personality, I mean, they're pretty locked in with their finances. Like I said, I don't think these people really will ever become quote unquote rich because I don't really think they want to be rich. But when it comes to their finances, like, these people are locked in, and the FIRE mentality and personality is extremely effective. Next up on the list is the gambler. And this one, let me tell you, all my boys from high school, like, this is half of them right now, especially with like how popular sports betting has become and just how popular gambling has become for younger guys on social media. Like, I got every freaking Friday night, I got my boys posting, on Snapchat saying, here's my parlay, tail me. And then after the game, they'll be like, yo, for those of you who tailed me, we're winning big tonight. It's like, bro, you turned $15 into 50. Like, relax a little bit. And to be fair, like, some gamblers, look, I mean, you can argue some knowledge is involved, especially when it comes to sports, betting or understanding odds and understanding probabilities. I'm not saying these people aren't intelligent people, right? The problem is expected value, and this can be sports betting, this can be traditional slot machine gambling, whatever it might be. This can literally be any type of gambling. Most gambling platforms are built so the house will win. We all know this. Vegas, when they put the sports lines in, like, they set it up to where the majority of the time Vegas is winning, not people. And that's not my opinion. That's just math. It's statistics. Because why would they make it easier for people to win? They want more money at the end of the day. And the biggest problem with gambling and sports betting in general is when someone wins big, it often reinforces their behavior. And now they think like they're onto something. Like, I know a whole bunch of my friends who have, I think my friend who's done the best so far made like $600 in a week. And like, that's pretty decent money. But now that's all he does is sports betting because he thinks he's going to like retire off of it. And I'm just like, bro, like, it's not going to work that way. And the problem with, sports betting too and gambling is the emotional swings are real and it's addictive. Like, if you lose, you're going to want to bet more to win back your losses. You're going to double down and you're going to try to make it all back. And can someone really make money gambling? Of course they can, right? But it's rarely, just how I mentioned previously. For every one person making money on sports betting, there's probably 1,000 who have lost money, and hopefully not so much money that they're putting their family or their lives in jeopardy. And this person, I would say, almost always is going to lose money consistently. I would say for the most part, the gambler is cooked. Like, these people are definitely going to be cooked. Next up on the list is the saver. Now, this is the person who they're probably allergic to any type of debt. They probably don't like taking any risks with their money or really just deploying their money in general. Usually savers feel the least stressed and the best with their finances when they just have a big, large cash pile that they're sitting on. Doesn't have to be in an investment account, doesn't have to be generating them any type of income. As long as they have money in their account, they feel good. And honestly, I think I'm a saver. I'm trying to get out of it because I want to invest more of my money, but you just feel secure when you have a lot of money. And savers usually are good at avoiding big financial mistakes. Like, they never over leverage themselves, they never gamble, they never really emotional invest or feel too much FOMO. The problem is they prioritize stability and safety over growth. And too much cash and not enough investing is pretty much what I mean by that. Because for the saver, the biggest problem that they're going to face is inflation, right? Inflation's always going to chip away at the value of money you have sitting in your account. And from a net worth standpoint, this personality will build their net worth. It's just very slow and steady. And that's definitely not a bad thing. They just can miss out on a lot of particularly good gains, especially throughout their younger lives if they're really locked in on saving. Once again, it's safe, but you just need to be a little bit more aggressive and make calculated, investments with your money that are going to be good for the long term. These people, they're definitely locked in. Next up on the list is the spender. This is the person where, look, they believe money comes in and money goes out. That's about as deep as they think when it comes to their finances. This is the person who lives in the moment, max out credit cards, don't care, I'm spending money to enjoy my life. Why would I earn money if I can't enjoy it? That's the mindset they live by. They think people who save and invest and plan for retirement are wasting their time. They work hard for their money, they want to spend it. And spenders, honestly, in my opinion, sometimes can be definitely irresponsible, but they can definitely also just prioritize enjoyment over future security, which I don't want to say is it's not a bad thing, but you definitely need to care about your future self. This happens a lot with younger people where, they're in their 20s and they're like, why would I plan when why would I invest in my Roth when I won't be able to touch it till I'm 59 and a half? Well, because the problem is when you're 59 and a half, because that point is going to come up at some time in your life, you're going to really regret spending all that money in your 20s. And a lot of people don't like to think that long-term ahead, but you have to think that long-term ahead if you want to be financially free. This personality often assumes that their future income will fix everything. Like, oh, I can spend all this money now because I'll double my income in the next 5 years, or, my investments are going to pay it off. But bad habits compound just like investments do. With more spending, your spending's only going to get worse. And with more income, it's probably going to get worse too, because now you're making more money to spend. And look, spenders, just like the lifestyle flexers, they might look successful. They might have a lot of things and materialistic items. They might even earn a decent amount of money. But from a long-term net worth perspective, these people are probably going to stay broke until they can at least tighten up their spending or really make sure they can afford the things they actually want. Next up is the trend chaser. And this is the person who is just always invested, dropping all their money, high conviction on whatever is performing well. They might know nothing about crypto, but if crypto's popping off, that's where they want all their money. They might not be able to name one AI stock, but if AI stock and the AI industry is popping off, they're investing all their money in it. Real estate, when rates are low, they want to be the real estate purist. They forget about everything else, want to put all their money into real estate. Whatever is running and pumping right now, that's all they're talking about. That's all they care about. And to be fair, sometimes they might catch the tail end of a good pump and they might make some decent money off this. The problem with trend chasing is you're just never going to be consistent, right? Because trends always change. Every single day, there's a new trend in the stock market. And they're going to chase momentum, but they buy when something feels exciting and they sell when it gets uncomfortable. And wealth, on the other hand, you need to usually build off long, boring repetition, because psychology here is driven by FOMO with this personality. They don't want to miss the next big thing. So when they hear about that next big thing on a news article or headline, they're instantly allocating money towards it before they even do research on it. And just how I mentioned with some of the other things on this list, if you're consistently resetting your strategy or pulling out to put new money into other spaces and not really diversifying yourself well enough and kind of trend hopping, in my opinion, you're never going to really build true financial wealth and freedom because you're never going to allow your money the time to truly grow. Now, these people, they fall kind of in between of might be cooked versus they trying. I think at the end of the day, I mean, these people are trying. I don't want to hate on them too much. They're trying to make money. They're trying to do the right things. But to be honest, they're like right here because they're also at, half these people are cooked at the end of the day and have no idea what they're doing and just trying to follow what is popular right now. So that is my tier list on some of the most common financial personalities that I've ran into through my financial career and just meeting new people. And almost no one is just one of these personalities. Like, let's be honest, if you look at this list, you could probably pick 3 to 4 of these that you fall into, and that's pretty normal. Growing your finances and becoming financially free, it's just built from small, repeatable, easy, systematic behaviors that mesh with your personality. So at the end of the day, the real question you need to ask yourself is, which one are you? And based off of that personality, how can I become financially free, right? So let me know in the comments which personality you think you are and which one you're maybe trying to move towards. And as always, thank you guys for watching this video. I hope you guys have a great rest of your day, and I'll catch you guys in the next one. See ya.